We've assembled an all-star cast right now to examine the credit markets. We have with us Richmond McCoy, CEO of UrbanAmerica and a happy hour regular. Jerry Glover, he is from the Small Business Technology Council, and Nick Bratzafolis, he is the CEO of Refinance.com, one of the biggest online mortgage lenders. Richmond, let's start with you. I know you've been doing a lot of deals. Your company, is one of the few that's in good shape where you can get access to money and to credit. What are you hearing out there amongst your peers as a business owner, as an entrepreneur out there? How bad is this credit freeze? Is everything just frozen?
Yes, the credit freeze is a good definition. It's real. We're in a good position because we've had an abundance of cash available for equity to invest in deals, but we're limited to only pursuing transactions with existing debt. But we're hearing, like GE has now announced that they're not going to be lending any dollars for the rest of the year for real estate. They're pulling out of deals, and MetLife is in a similar situation. So the market has come to a stop on the construction lending and on permanent debt. And it's really largely due to people don't know how to value the real estate that they might be lending on.
Let me start off with you, Jerry, talking a little bit about the small business side of this. Are you guys, are the people you're representing having a hard time tapping capital, as Richmond is talking about there?
They certainly are. A recent survey by the National Small Business Association indicates that 67% of their members are having serious problems getting credit.
What was the rate like last year? You say 67% this year. What was it last year?
It was down in the 40s last year.
Wow.
So it's a much dramatic increase. The Federal Reserve survey of bank lenders, of loan officers in August, before all of this started hitting, 65% of banks said they were tightening up the credit on small businesses. They were tightening up the restrictions. So it is not only isolated cases, it's across the board. The last time we had this was in the early 90s, and it really severely stopped the growth of small business, stopped job creation. Since small businesses are creating virtually all the jobs, large firms have lost over 3 million jobs in the last 3 years, and small business has been filling that vacuum. If we can't get money to finance the growth and expansion of the businesses, that engine is simply not going to continue to produce jobs and help the economy grow.
Right.
Nick, what about that? So there appears to be capital available to lending institutions through the Fed, through low interest rates and whatnot. The liquidity seems to be there. Why is it not getting to the small business? Are bankers just not willing to lend to these guys because they're afraid of losing their money?
You're absolutely right. What happens in mortgage banking is every mortgage bank has a warehouse line in order to fund the loans that it's making to the public. So when the credit market seizes up, what you have is the warehouse banks, the people who are providing liquidity to the general market, disappears. You have mortgage bankers throughout the country who are profitable, who are doing a good job, they're doing good loans, they're not doing the subprime, they don't have access to capital. What happens is it translates to the borrower. They're not going to be able to get the loans either. So the whole credit crunch is really affecting everybody.
Let me go back to Jerry for a second, because you touched on some interesting things there, Jerry. How soon would you expect that we would actually see a lot more job losses? You touched on a couple of companies. We mentioned Volkswagen, Caterpillar. Even just last week, I got news from an email from Mohegan Sun. Here in this area, one of the gaming casinos, saying they're not going to build the parking garage in their addition because of the instability in the credit markets, and the terms of borrowing money just weren't good. When are we going to start seeing a really, really bad effect in job losses because of this severe cutback?
Well, I think we already are. There are 40,000 jobs lost in the last month. Small business can't generate jobs if they can't grow and expand their business. I think that is becoming acute. We saw this happen in the early 90s. The credit markets did a lot. The government did a lot to help free that up and make that work better. SBA's lending alone is down 30%, and that accounts for over 40% of the long-term lending that small business gets. So there is a severe crunch already occurring before this crisis.
Well, Jerry,
this crisis becomes acute.
Those are government subsidized. If the SBA is cutting back on lending, what the heck is going on around here? Those are the guys that are supposed to be funneling capital in these types of times. Why would the SBA, the Small Business Administration, possibly be cutting back on capital outlays to these people?
I can't imagine why that's happening. In the worst of times, SBA lending is the things the bank relies on because they have the government guarantee.
So let's put $700 billion into the SBA. What do you think about that?
Yeah.
I think it's a great idea. I think you could do it for a lot less. Actually, if you put a few $100 million in SBA guaranteed lending, you eliminate the fees. What's happened is this administration has increased the fees on SBA loans so high that it makes it not economical for the small businesses to go out and use those loans and borrow those loans. Those fees have gone up dramatically in the last 3 or 4 years.
And the only reason...
And that crunch has really been a real problem. We've got to do an economic stimulus plan focused purely on small business if we expect this economy to come out of this.
Small business is very important,
Cody. Pulled us out of every recession we've ever had.
He's very opinionated on this. Sir, let me just make a quick comment. Small business, very important. Don't doubt that. But that's that middle tranche, that $500 million to $4 billion company, market cap company, that's where the real driver of the economy is, and those are the ones that are having a hard time.
Can I interject one thing?
Sure.
The reality is, I was around when the RTC issues, probably the only one on this panel who remembers that sitting here anyway. The reality, at that point, we could value the properties. We knew what real estate was worth. The whole issue right here is we don't know what these securities are worth. If they're $1, if they're $100. If we could find a way to establish what these securities are worth.
The government's going to do that?
No, it can't. Only the free market can do it. And if we evaluate the underlying property through whatever system we have, at that point you can value the securities.
But there's your problem. The banks can't do it. The government can't. No one can
do the real estate.
That underlying.
They can't do the securities. This is the first time in the security market.
Go ahead, Richmond. Last word for you.
No, Cody, what's going to happen here is the government is going to come out, they're going to pass a bill, they will buy a lot of these securities, they will set a benchmark. No one will agree that it's the right price, I assure you of that. But if they pay too little, they're going to do a tremendous amount of damage to the other financial entities that are still in the business, because then you will set a benchmark. So there needs to be a long process to be able to analyze these assets, and then ultimately some of them will term out, they'll perform, some of them won't. But that is the biggest problem, that there is no transparency, and this bailout will at least set some type of visibility to create some value here.
Richmond McCoy, CEO of UrbanAmerica, Jerry Glover from the Small Business Technology Council, and Nick Bratzafola, CEO of Refinance.com. Thank you, gentlemen, very, very much for your insights.